What is up, you guys? Welcome back to my channel. Nikki here, and in today's video I'm going to be going over an ETF that I am buying right now for my dividend investing long-term portfolio. So y'all, let's get it. And as usual, guys, a few quick things before I dive into the ETF. So one, ETFs, in my personal damn opinion, are the easiest, most less risky / laziest type of investment that you can make in the stock market, hands down. And that is mostly due to the fact because in an ETF, when you buy a share of an ETF, you are buying one share of a plethora of companies and stocks. For example, I always talk about SPYD, one of my favorite ETFs that pays a great dividend, and they follow the S&P 500. So within that ETF, they have holdings of S&P 500 companies. So you buy $50 worth of that ETF, that $50 is going into a numerous amount of companies. So diversification is the #1 thing with ETFs. Two, yes, there are fees, maintenance fees specifically associated with ETFs. I'm not gonna go into that in this video, but just know that is a thing. You do have to actually pay a maintenance fee, and that's really all I'm gonna say about that. And three kind of piggybacks off of #1, but you don't have any control over the buying or selling of the companies within the ETF. Obviously, you can control whether you buy or sell your shares of the ETF, but within that holding, you have no say over what stays and what is out.
You're fired. You're fired. You're fired. You're fired. You're fired.
For example, in this specific ETF, a year ago, they had ExxonMobil as one of their top 10 holdings, and since then, it's been nicked, is gone, long gone, hit the road, jack. But if your ass is lazy, then you probably, honest to God, won't even notice what's going on. And last thing is, this ETF actually holds a lot of companies that I personally already own in my portfolio. So I was kind of wishy-washy as if I really wanted to add this to it, but two reasons. The main thing is that it's going to give me exposure in companies that I already love, so whatever, more is better. And the second thing is it's going to give me exposure in companies that I've had my eye on that I just either didn't have enough capital, most likely that's actually the entire problem, to purchase single shares to add to my portfolio individually. So that is why I'm very into this ETF. So you guys, that ETF is going to be the man, the myth, the legend himself, ETF Kevin O'Leary, the ETF OUSA. It is the O Shares US Quality Dividend ETF. My lord. You know, these guys can just make an easier, like, money bags ETF.
Money over bitches, smarten up and get your cash. You get killed for that bag, it get real for that bag. We in this field for that bag, that bag, that bag.
Or like Big Bala ETF. I mean, maybe there's like a rule or something, I don't know. If you guys made an ETF, if you had your own ETF that you created, what would you name it? Actually, that'd be so funny. I'd have some wild ass names. Let me know down below what you would name your ETF, because I think that's hilarious. But anyway, let's get back to the damn video. So to be honest, because I like honesty and transparency, y'all, okay? Because we're in this together. I honestly don't find a lot of fun in ETFs because I am very hands-on in my portfolio, which means I research a lot. I try to find really good companies, blue chip, you know the deal. And so ETFs kind of takes the fun out of it for me, but it is a way to get exposure into a lot of companies that I really would like to own individually without as much capital. But also, I was researching Kevin quite a bit, and I just really love his investing strategy. I love his thoughts, his processes, his stance on investing. And you guys already know that I'm a firm believer, and you have to find what works for you. There's not one way is the end all be all. We can all have our personal opinions on what's gonna make us the most money. We each have our own risk of what we're willing to take to make said money. So I just really vibe with my boy Kevin.
But I'll tell you something, over the years, I feel the karma. I know before they even say a word. It's just that aura.
So here are a few reasons as to why I'm really feeling Kevin. I shouldn't say feeling, that's kind of weird. I get along with, I agree with Kevin O'Leary. And to be honest, I might be related to this man because O'Leary is my blood. So I'm just saying, I don't know how I find that out really. but that can be another day's problem. The first reason being that he believes that dividend, long-term buy and hold dividend investing is really the only way, the best way to be investing your money, for one simple stat that just kind of blew my mind, that in the last 40 years, 71% of market returns came from dividends, not from capital appreciation, okay? It's kind of a no-brainer. Second thing we really vibe on and agree with is the fact that cash flow is king.
I want to read a poem, okay? In cash I know, because I like to watch it flow.
Think about real estate investors. Think about real estate investing, okay? They always have to make sure the number is correct, the numbers add up, so they can have cash flow on these rental properties. Now, I will say I believe cash flow in real estate shouldn't be the end-all be-all, because you are getting extreme appreciation. You're gonna hold that for a very, very long time, and as long as the mortgage is covered, you should be fine. But all in all, cash flow matters, because that is that passive income that we are all trying to get. I also absolutely love the fact that he will not jump on to a new hype stock, a new fun fad, anything that's pretty baby in the dividend world in general, because he really wants the company to prove to him that they can sustain their cash flow, they can pay out their dividends, and they can continue being profitable and making a lot of money, basically, okay? And the last thing that he kind of talked about that just really hit home for me, and I don't know why I had to hear him say it, but hey. You know, I had mentioned in a previous video, I'm not a huge fan of growth stocks. Like, I do like one here or there, but like my mission is not to seek out the next Amazon, it's not to seek out the next Tesla. Like, that would be cool and rad or whatever, but it's just not my MO, it's not what I want to do. And growth stocks don't really excite me, and they don't really excite him either, because growth stocks are just making the CEO and executives a lot of money. You as an investor will never see that return on investment until you sell your holdings, your positions, your shares, all that stuff. Like, you won't see a damn dime, a damn lick until you actually sell it. But with dividends, every single month in some cases, every quarter in most cases, you are getting a return on your investment without having to sell your position. So yes, if you invest in something and after, you know, 2 months it's up 300% and you're just, you know, feeling real damn good, there comes a fine line, because you're like, do I sell it and cash out on my profits and try to find the next thing? Is it done growing? Is it gonna continue to go? Is it gonna slap down? Maybe if I just hold a little longer. And then granted, you could hold it a little bit longer, it goes higher, you could hold a little bit longer, you could lose everything. So like, I don't know. I mean, you see it in your account, you see the percentages go up, but until you cash it out and take your profit, you're not making that money. You're not getting a return on the initial investment that you made. But with dividends, I can put it in there, I can see that slow, steady capital return, but every single quarter, I'm just making money. Like, I can see the returns coming in. And for me personally, and especially with 71% of the market returns being in dividends, there's really no other, like, why would I invest in something that doesn't pay me that? But that's enough of that talk. Let's go ahead and let's look real quick at the ETF, a few of its holdings, and a little bit about the damn ETF. So you can see O shares US quality dividend currently around $38. You can see the last 5 years it's up a decent amount. The last year it's up all right, but obviously we had that huge sell-off this year, because you know why. They do pay a dividend of 2.04%. The PE is about a 20, which I'm not too upset about. The 52-week high is basically what it's trading at right now, so it has recovered from the 24.40 low that it had this year. And yeah, there's just kind of the basic stats of what it's doing currently right now. So this ETF has about 100 dividend paying companies, and the top 10 holdings within this ETF are right here. You guys see here Microsoft, Johnson & Johnson, Home Depot, Procter & Gamble, Merck & Co, Verizon, Apple, Pfizer, Cisco, Honeywell. And just out of the top 10 holdings in this ETF, I own 7 of those 10 anyway, and I just really like the objective of the fund. So that is, the target index is designed to measure the performance of publicly listed large cap and mid cap dividend paying issuers in the United States that meet certain market cap, liquidity, high quality, low volatility, and dividend yield thresholds as determined by the investment advisors. The high quality and low volatility requirement are designed to reduce exposure to high dividend equities that have experienced large price declines. I'm just extremely stoked to add this to my portfolio because it's gonna give me exposure in companies like Procter & Gamble, Visa, Kimberly-Clark, and Lockheed Martin, just to name a few that I know that I've wanted for a while. Did you guys know about this ETF? Am I late to the game with this ETF? I know I heard it in the background a little bit ago, but I never took the time. So if you already own the ETF, let me know. If you don't own it, let me know. If you've heard about it, all that kind of stuff, what your thoughts are on it, because you already know I really love to hear that from y'all. And if you found this information helpful in any sort of way, could you please smash the damn thumbs up button? You already know it helps your girl out. And if you are not subscribed, you're not part of the crew, I don't know what you is doing, hit that subscribe button down underneath the video or the NB in the bottom corner. I post 2 videos a week on this channel about money, investing, stocks, finance, having a good ass time and making dough. So if you're into that, or if you just enjoy hanging out with me, please consider subscribing. And you already know, if you made it this far, you are the real MVP. Come here, you know I love you. And like always, you guys, enjoy the journey, whatever your journey is. Always remember to do it, set your hearts on fire, and I will catch y'all in my next video. Bye, guys.